The definition of income in the mortgage world is what is your ability to pay on an ongoing and continuous basis. One of the people you talked to, I think, even said, oh, just don't put down that you've been working the last 2 years. If anybody says that to you, run the other way. That is called mortgage fraud.
Yeah, I had no idea that one of those lenders was going to suggest mortgage fraud to me until you went like validated force. Like, no, I'm not interested in that path in the slightest.
Omar.
Hey, Brad. Hey, everybody.
Yeah,
Omar, nice
yeah.
to meet you.
I don't think you've ever seen Jen, but that's Jen.
Just a magnificent headshot in Slack when she's solving all my problems.
Oh, okay.
Great to meet you, Jen. Thank you so much.
How's the house, by the way? Everything good?
We're so excited. Yeah, it's magnificent. We are, so I think our formal move-in day is to be September 23rd. Rihanna is doing a lot of shuttling back and forth until then. But, yeah, everything we dreamed of and more. And we keep seeing all these other houses getting sold in the area for higher prices. So, oh yeah, we're nailed it.
This is we got lucky. You know what? That's what I tell people. July and August are great times to buy a house because
no. Do you see my notes? Like, do you remember I went and did my visit at this place the week before July 4th, and there was just nobody out there. And, you know, again, like you gave me great guidance on what the right way is to visit a house. It's not to go and like introduce yourself to the seller's agent and sign in on a sheet and like, you know, try to make them feel comfortable. It's actually to be a ghost and just go there and like get as much information as you can. And then you could feel it. It didn't feel like there was a ton of demand on that open house day that I went there. And then, you know, we make our offer on Tuesday and got accepted on Wednesday. It was magical.
it's a beautiful thing. Yeah. We have a couple of listings. I mean, it's shown, but it's quiet. It's just everybody's doing nothing. I mean, I have the two listings. I'm telling both the sellers, look, let's just take it off the market for the last 2 weeks of August. Nobody is doing anything. Kids are getting back to school. I mean, it's just the whole bundle of everything until Labor Day, and then everybody breathes. Mm-hmm. Yeah, it's crazy.
Again, I feel lucky, right? I'll always remember July 2nd as the day that my offer was accepted.
Well, one of the things I want to point out about this is you're looking at a couple of different houses, but I remember you saying on Slack, if you get this house, my wife will be indebted to you forever or something to that extent. This is the house that you absolutely I completed her. Right. Exactly. It's great to hear because, you know, when you get into these competitive bid situations and there's 38 offers and you're buying just because you think you have to buy, and it's okay. It's a nice house, but it's when you really want one, it's really awesome. And you get it.
Couldn't agree more. And
where did you buy a house at?
Yeah,
somewhere in here.
Exactly. I think I see it right on the bridge.
Yeah, there it is. Oakland Hills. That's why I put the picture.
Beautiful area.
Exactly it. Yeah.
So let's talk about some of the negative stuff and how we solved the problems. First of all, fire insurance. Talk about what you went through to get there.
There's multiple iterations, right? You know,
Exactly. I want people to really understand what they may have to go through in order to just get the house insured. With the bottom line being, you can always get Fair Plan. It exists. You can get insurance. It's just going to cost you. So go ahead and explain it.
It wasn't even like you go to Fair directly, right? You need to go and find the right vendor that's going to go and, you know, get the Fair Play coordinated for you. And,
actually, let me interrupt you there. There's actually, you can go to the Fair Plan website and do it yourself, but it's the same price. So it doesn't matter, but Fair Plan doesn't cover everything. So that's why you need to have liability and a bunch of other stuff. So.
Yeah. I mean, like you're getting to some of the later things, when we had left it with that other insurance agent, you remember like we actually had a hard time coordinating between the insurance seller and the lender. And, you know, we kept trying to go in between. This is where, Jen, you were a superstar for us, right? You kept going and trying to make it so that the two parties were speaking the same language. And then even at the end of the day, the fact that like the farmer's insurance plan was separate from the Fair Plan actually weirded them out a little bit. We had to sort of explain that like in California, the only way you're going to get fire insurance is by going to the Fair Plan, which is kind of like a different item than the farmer's insurance for all other liabilities. Mm-hmm. And, you know, it was like a point of heartache, I think, over 2 weeks after we had gotten our offer accepted. It was like really late stage in the game there.
And you ended up with fair plan and then the farmer's policy with the liability and some of the other peril coverages. And so the lender had to be on both of these, but they were wondering why there was both. But which is kind of weird because they do a ton of California business. I'm sure they've seen something like this before, but it's work. And in the contract, by the way, there is a line. If you waive all contingencies, you technically have waived this. But if you're not waiving the inspection contingency and all those, I think it's letter Q things, or L. No, it's L. And you get 17 days to get insurance if you have these contingencies still active. Smart agents will come back and change it to 7, so that doesn't drag on. But, what we try to do is in advance tell people, hey, here's going to be the problem. Go to a couple of places, start finding out if it's feasible or what it's going to cost, because it might come back. We had one that came back at like $20,000. I mean, it was insane for the just fair plan or just added coverage plus fair plan because of where it was. So it can be a little crazy.
And you remember we actually had to restart the entire process like halfway through because it had been my wife's name on the policy, even though it was only my name on the loan. And then, it was both of our names, but her name was listed first or something like that. We had to go and have my name listed first.
Yeah, but minutia. That's what lawyers are there for, and ChatGPT lawyer will make it worse. Right? Exactly. One other interesting thing about Omar's situation is his mortgage. So he did not have a fully underwritten pre-approval, which if you listen here all the time, you will hear me scream and yell from the mountaintops, fully underwritten. But the problem was he's got a real job now with a real paycheck, okay, with a real company that you've heard of. The issue was for the last 2 years, he decided to play startup in year 1, you get this massive write-off because everything's an expense, which is a beautiful thing, without paying taxes. Second year, I think you made a little bit of money. And what they normally do is they call yourself, average the 2 years, it comes out to snorkus and a big loss. So because he still has the company, even though he has a real job, most normal lenders would take his current salary and add the negative 2-year average, and he'd be in negative money. But the fact is, he was scaling the business down. You can explain this better than I, but you were kind of selling off the licensing of things and kind of being done with it and just rolling out of it. So
you got it. Like the nuance there is that we had an acquisition from a company over in Europe that was like slow playing it as they went and raised funding to go and use that IP. And so we had this entity that was net positive for the past year. But the year before that, it had been doing startup style losses because they own over 50% of the company. They were holding that against my personal return. And, it was something where we could go and have all of our accountants and lawyers signing documents to that effect. But, the lenders don't like nuance. It's nuance is not their friend. They just want to go forward with it. If you remember, it was actually like we had an underwritten note from, I think it was the first lender that you introduced us to. And he was actually the guy that spotted this landmine. And it was one of those ones where I'm very glad he did, because if we had gone through the entire process, assuming that everything was okay without that, it would have been a really bad situation later on where we probably would have lost our earnest for the escrow, because it wasn't going to work out. We talked to 100 different lenders. It wasn't going to work out until you introduced us to the one that did. Mm-hmm. And it was multiple different brokers and nobody could find it but you, Fred. It was pretty special.
It's a beautiful thing. It works out. I know you had talked to some lenders and they were kind of quoting at 10% and 3 points or, so, that when it's double digit, it is commonly referred to as a mob loan. So you're paying big and not interest at that point.
Exactly. With points up front and all that good stuff. But I mean, I worked in a hedge fund for 10 years. I had leveraged all my connections at all the banks. But again, people don't like nuance. So you were able to find that last one. We have a very reasonable mortgage from my perspective.
So we have one lender who, as long as you're putting 30% down, they'll listen to your story.
Yeah.
And if it makes sense, they'll lend. And that's what this ended up being. I mean, there aren't many of these lenders out there. There's some private people who might have lent the money, but you got to be licensed and all that kind of stuff. But these guys were great. And we gave them a good letter of an explanation. And I think a letter from your accountant, your CPA, saying what was going on. And the fact was that we gave them P&L for this year so they could see this still going. And the fact that he's got a real job is like, oh, okay. You're going to, the definition of income in the mortgage world is what is your ability to pay on an ongoing and continuous basis. Mm-hmm. One of the people you talked to, I think, even said, oh, just don't put down that you've been working the last 2 years. If anybody says that to you, run the other way. That is called mortgage fraud, especially when you have this gigantic loss on your tax returns. So that one really irked me.
It was so interesting, though. Like, I had no idea that one of those lenders was going to suggest mortgage fraud to me until you went like validated for us. Like, no, I'm not interested in that path in the slightest.
Yeah, it's only 10 years in jail and $1 million fine. So yeah, I'm sure Rihanna would enjoy the house, but be a little quiet.
But you get to keep the house. Oh.
Or you're selling it to pay off the judgment. But yeah, like they say in South Park, drugs are bad, don't do drugs. Fraud is bad, don't do fraud. Okay, same thing. So we're able to get it through. Took a little bit of work. The account executive helped out a lot. Weaned it through. They're a little weird because they're not standard Fannie Mae type of thing, but it all got done, and in the house he went. So I like talking about this because this is something different, that if you're out there and you have a little different situation and you don't think you can do vanilla, talk to somebody about it, because there might be a way. Obviously talk to us.
That was actually surprising to us, though, right? Like, we didn't quite know what the process was going to be with you versus a traditional real estate broker. And you were like holding our hands the entire time. You were more responsive than a usual broker would have been. And that was really, really important to us. I'm tremendously grateful.
Yeah, thank you. That's a great thing to tell people. We get the question, well, what do you do that a traditional broker doesn't? Because they're thinking, hey, our price is lower, so we must do less. And really, the only thing we don't do is accompany you to open houses, because, we teach you how to go to an open house. And
you gave us access every single time that we were looking for.
Right. So that's basically it. But what can you bring out and tell people that's the difference that we have that other agents, regular agents
Is Slack okay to talk about? Because that was
please, I beg you.
That's Fred's favorite conversation.
I understand why, because I can't imagine like having to go through this process with like only email coordination, or heaven forbid trying to like phone call anybody. I was giving you like 9-point lists, Fred, that I was like queuing up in Slack to get there 7 a.m. Monday morning. Right. And by 7:15 Monday morning, you responded to all 9 items. And it was just amazing how fast we were.
Yeah, but we wanted you to hit enter after each one of them so we could have separate threads.
Sorry.
That's the only thing we bitch about, is people don't allow us, they'll list 3 properties on one thing. Like, no, do it 3 times. You can have 3 threads. So
you guys used threads perfectly. You did. Like, we could pin them to the channel and close them out when they were done. It was amazingly well organized.
I must have been using Slack now for, 10 years. Mm-hmm. I mean, I was an early adapter. What was that? There was like a couple of them out there before Slack. I can't even remember the names. And I tried them and I loved it the minute I saw it. This type of communication.
Jira. I don't know if you remember.
I don't remember that one. David Sack did one, I think. I don't remember.
MSN Messenger? Anyone wants a messenger to those count?
Man, not that old.
ICQ?
Right. Yeah, you're going way back, dude. Tech people are laughing right now. ICQ is wow.
Yeah, genuinely though, like you or more experience with Slack than most of the people I've worked with in finance and big tech. It was really awesome.
It probably aggravates them. That's why they don't want to learn it. My favorite thing about Slack is we work in Washington State and we get some people who work at Microsoft and we tell them we're on Slack and they say, oh, thank God, it's so much better than Teams.
100%.
Anything else you want to add?
Well, I did think that it was beautiful that you kicked off a relationship by just going in and sending that disclosure patch you get through ChatGPT. Me like, oh, this is how you can go and diligence documents. Here is this amazing report. Don't be shy. Do it yourself. And we did. We use it for every single one of the documents that we got. And
Actually, it's getting a lot better. GPT-5 spit out something today, and I was really impressed about it. I mean, it kind of talked to you in a certain way about it, because you can set kind of how you want your tone, and it actually really worked. We love it. I mean, the estimates for dollar amounts, right now it's going to work for you because we're sending it off to other agents when we're trying to argue for credits for repairs, and they don't even know where we got this stuff from. So it's worked like a dream.
We try to do some like competitive market analysis using ChatGPT in the early days. Like the trick with all these large language models is they're only as good as the information that you give them. So a lot of those early estimates were off, but that's where your team was great at calibrating. Because like the best case scenario is that you have the ChatGPTs to go and handle all the like weird little bits and things that take a lot of time. And then you have an expert review the output to ensure that there were no hallucinations there and that everything's grounded properly. And really, it was fantastic.
What I'm looking forward to is an agent I can set up where I can just say, go and open my multiple listing service, go through each and every statistic you can find in there that's buried, and then analyze, what the price should be based on all that and trends. The problem is they fold it so tightly. They do things monthly. They put out, monthly home for Santa Clara County. Well, I want to know what happened this week. If I'm doing comps, I need them absolutely up to date. And so hopefully they get better, or we're going to be able to extract it and make it better. So that'll be a beautiful thing.
Spread GPT?
Spread GPT. I don't know. There's whatever up in here, and it's what I use. That's good enough. Really appreciate you coming on, talk a little bit about this. And I know what you're doing, and I don't want to say it out loud, but the thing that Omar is now working on, we're praying becomes amazing. So
I appreciate it, Fred.
That's
I
all.
now have the house to build it from. So thank you very much.
There you go.
More grateful.
There you go. Enjoy and keep in touch.
Will do. Thank you all so much.
Yeah, Omar.
All right. Anyway,
So that brings up a point. We're like the bull mortgage issue. Good point about how long do you have to wait to refi?
here's the newest, biggest lie in mortgages. You're talking with a loan officer, I don't care who it is, bank, mortgage banker, broker, and they say to you, oh, you can lock in now. You can refi anytime after 6 months. If you read all of your documents that you get at closing, your note, your mortgage, disclosure, this, that, the other thing, it says right on the note, there is no prepayment penalty, period. Owner-occupied property in the United States, based on all the rules they changed back in 2010 after the option arm crisis, as I call it, the 1%er, says that all owner-occupied property, you must verify that they have an ability to pay. So you're always going to get fully documented in one way or another, and there's no prepayment penalties allowed. So why they say 6 months is here's what's happened. Let's say you get a 0-point mortgage, zero cost mortgage. You're saying it's great. So the thing is how the lender, broker, loan officer get paid is that you're taking a higher interest rate so that the lender is actually paying them for you to get that rate. So the lenders all have in their contracts to say, if within 6 months, your borrower refis, it doesn't have to be with you, it could be with anybody. And obviously you have no control over them. The broker, lender, whoever has to pay back that buyer broker fee. So if they're charging you 2% on $1 million loan, it's 20 grand. They got to pay back the 20 grand if it refis, if that loan pays off within the first 6 months. So literally your borrower could win the lottery the next day, pay off the mortgage, and the broker's got to pay back the 20 grand. And by the way, we're at a flat fee. We're not a percentage. I think we're the only company in the United States that charges a flat fee on mortgages. It's insane, over the wholesale price. Or you could get, the 0 point rate from the lender and pay us our flat fee. That's another way to do it so that you get a lower interest rate. So there's ways of doing it. I'm rambling as I usually do, but that's the reason why. So the 6 months is fake. It's completely fake. And they're all lying to you, but they're trying to preserve their money.
Companies have to like keep that revenue out of, they can't spend that revenue for 6 months in case they have to pay it back.
Well, they pay the loan officer usually. Okay, they do that, and they figure it out later. I did have some people in the 21 refi craze when it was the 3s and 4s, and I told them quite frankly, look, I lose the money if in 6 months, and they understood, and they were good. And I had a guy call me every 6 months. I did 3 loans with him, just getting his 15-year down. I'm sure he was in the 2.5s or 2.625. So he's never going to refi. But that's the way it works. So just ask that question, or they're going to tell you that, and then you're going to know more than they will about it. So, and it seems like, and here's a little economic predictions now that we're Monday, August 18th, 2025. Rates came down last week a little bit, and then they ticked a little bit back up after the PPI came out. And my issue is everybody talks tariffs. These tariffs haven't really hit yet in full. I don't even know what's going on with each individual country. I don't know who's keeping track of this stuff, but it hasn't finalized completely. Once it finalizes
things,
then we're going to see inflation tick up. But then because of the inflation, we're going to see people being laid off and the economy not spend as much. So the economy is going to slow. So you have this thing called stagflation, not like a stag party. It's inflation, stagnant economy. And, there should be the reason you lower rates is to stimulate an economy. So, but you can't do it if it has inflation, because you need to charge a higher rate so people will stop inflating the prices and lower them. So you see the problem everybody's up against? You see the problem that the Federal Reserve, I'm not just saying the chairman, but the entire Federal Reserve is up against. That's what they're arguing. That's what they're talking about. That's why, the rates didn't just drop. And, so I think we're going to see a few months more of kind of where we are, a little dip, little raise, little dip, little raise. But I think in 6 months or so, if this all pans out, maybe 9 months, we'll see the rates come down.
Sure.
And I think we're going to have a busy 2026 with refinances. Keep Jen busy. That's the idea. Jen, what do you see when we do mortgages that people kind of don't get, or maybe forget, or don't give us, or anything that you could?
They just have so many different bank accounts, like 10 different bank accounts.
Yeah, it's a problem. When we got to verify it for a purchase and they need to show it all, it's a pain in the neck. On a refi, we don't need it all. We only need to show they have enough money to pay whatever they need to pay for the refinance. Plus, we borrow a little more just for fun, for reserves. And that's a standard Fannie Freddie, maybe a jumbo. It's going to ask for 6 months of payments. So you don't need to give tons and tons and tons of accounts. And I know everybody does this. Oh, I get a bonus if I sign up for this one. So I sign up for this one. And you forget it's there. And then you get this one. And it's all digital. It's not like you're getting 50 statements in the mail. And I think that's why people tend to just have all these accounts, because we can. Crazy, but
That and RSUs.
the RSUs.
Yeah. If they don't have them for 2 years, it's hard to use them.
Right.
They've been there for years.
Right. You need to show a 2-year history of getting the RSUs. That's really it. Everybody's contract is going to be a little different. Some are based on performance. Some are just based on time. So the ones on time is great. It's easy, so we can figure it out. But if you're just getting RSUs for a year, again, I have that lender with 30% down. They'll look at that. So I'm not saying guaranteed to do, but they'll look at it. So the RSUs are a big thing, mostly in California with bigger companies. But that's another mortgage thing to look out for.
Do you advise people consolidate their bank accounts?
Well, we just want to make it easier for us.
Yeah.
I know a lot of businesses will do like that profit first, where you open up 6 bank accounts, one for income coming in, one for tax, one for owners, one for OPEX.
Yeah.
One for payroll. And then you juggle money that way based on percentages.
Yeah, it's kind of crazy. I guess when you get big, you kind of need it. I mean, we have an escrow account for California and Washington that we have to have, an operating account, pretty simple. But yeah, we could put a lot of different accounts away for little things.
Opening accounts to get a free toaster.
Yeah.
That still exists. Walk into a physical bank and walk out with a toaster. Wow. I don't know.
Maybe a credit union.
Oh, I walked into a Wells Fargo the other day because I got like a $32 check from something, some company for something. And I figured, hey, I'm in the neighborhood. I'll just, instead of I was out. So instead of taking pictures and putting it in the app, I'll just go to the Wells Fargo. So I went there and, gave her ID, and she said it'll be $10 to cash my $36 check.
Really?
$10. So they didn't have an account there.
Was it a
Wells Fargo? Yeah. So, man, they don't want the transaction. That's what they're saying. Go do it digitally, dude. I mean, they save so much money digitally. I can only imagine. Now I'm amazed they have tellers anymore. I'm sure there'll be, I've seen banks with tellers with a screen. There's a screen. It's a person, but they're not in the bank, and they don't do cash. That's one of the other things. I mean, there's not as many bank robberies because there's not as much cash. 10 years from now, there's going to be no more robberies of banks because there's not going to be any cash. So these guys,
online heists and hacking,
control your Bitcoin, wallets, all that good stuff.
This week on Reddit.
So we dealt last week with should you be a real estate agent for yourself?
Yeah. And why it might not be best to buy a house. It might just be better to be a renter.
That wasn't from Reddit. That was the TikTok. But yeah, that was great. The appraisal process. This is one that got into Reddit a little bit, and people were talking about it, and I stuck in. There was a woman, I can't remember her name, who wrote an article basically saying, these should be the modern way of doing appraisals. One of the things that always irks me is when you apply for a mortgage for your house, the lender requires that you upload a copy of the actual contract. And what they do is they give that contract to an appraiser ahead of time before they do the appraisal. So the appraiser sees, it's $1,733,314.26. It's the sale price. Amazingly, the appraisal comes in at the exact same price. Amazingly. That's because it kind of makes it easy for them. They kind of know where they're going, but it doesn't give you an accurate valuation based on a blind appraisal. It's like, hey, what's this place worth? It's like when I do comps for someone, hey, I want to put an offer in 123 Main Street. Can you do some comps? Okay. I'm going to start from scratch. We don't know what we're bidding. I'm saying, okay, this house went for this price, but here's the differences, be it negative or positive. But here's 3 of them. Or I looked at one today and there's literally no comps. Nothing is sold in the last 90 days in this little area. So what do? You got to work for it. I mean, there are things you can do, but this would be fair. This would probably kill the real estate industry, piss off sellers and listing agents like there's no tomorrow, make every deal have an appraisal contingency because you just don't know, or more of them. Silicon Valley competitive offers and Cupertino, 38 offers, there's never an appraisal contingency. If I'm working with one seller we're the only buyers, hell, I'll put everything in because I can. So you just got to be real careful. And here's the way it works. If the appraisal comes in low, the lenders use the lower of appraised value or sale price. So what they do, if your mortgage amount is still lower than the sale price, they just reprice it based on that loan to value. So for example, if you bought a house for $1 million, you were getting an $800,000 loan, 20% down, but it only came in at 900. So now whatever 800 divided by 900 is, you're going to have PMI. You're going to get a different rate because rates are based on the loan to value and your credit score and a whole bunch of other things. But actually sometimes over 80%, you get a little better rate because they have the mortgage insurance, and the mortgage insurance can be paid monthly or actually built into the loan. If you think your property is going to appreciate fairly quickly within a couple of years, take the monthly payment, because what you do after 24 months is contact the lender and ask them to take it off. And they all have different procedures. Maybe they do an in-house appraisal. Maybe they send a real appraiser out there. Maybe it costs a couple $100. But that way, you can get that off the monthly payment. If you finance it in, you're done. You can't redo that at that point. You have to refinance the whole loan to get rid of it. So there you go. If you've been in the house a couple of years, property's appreciated to not 80%, 78%, because they need that up just so they have a little wiggle room, I guess. I wasn't in the room when they did that, but that's kind of the idea. So when you get to 78%, they can take it off. So there's something to do when you got nothing to do. If you got PMI, not FHA, can't get that off. That stays on forever. VA, it's all upfront. It's built into the funding fee. And remember, kids, VA refinances with absolutely no documentation. It's the best.
Really?
Yeah. I don't need income docs. I don't need to do an appraisal. I don't need nothing but a credit report, your DD-214, your a couple other forms, and we're rocking and rolling. It's the easiest loan in the world to do. I wish they did this for conventional. And even FHA. We used to have FHA streamlined, but they're not like they used to be. But anyway, we can do a whole thing on refinancing once the rates start dropping a little and more people are into it, and how to be prepared for it. You're still going to need income documentation for current pay stubs, 30 days, 2 years, W-2s. Sometimes, we like to run the Fannie Mae computer and it'll say 1 year of W-2s, so you don't have to get all that. So kind of wait to do that, but be prepared for 2. And then enough cash to show the money you need to actually close. And that's on 2 months bank statements, and that's it. So copy of your insurance, because we'll need to change the insurance over from one lender to the other. And that kind of gets you going. And you make the full application and product, yada, yada, yada. Now, let me just throw this out. Just if you really want to track interest rates, Arrivva.com/rates, and we'll put that on the screen. And you can sign up to get rates, and you can get them every day or whenever they change. Someday, this was about 2 weeks ago, 3 weeks ago, you would have gotten 4 rate changes on a Tuesday, I think it was.
Wow.
So this way, it kind of gives you an idea what's going on. It's just nice to know if you're looking to refi. So do the refis also not by rate, but by dollar amount. Because, half a point on a $2 million loan is different than a half a point on a $200,000 loan in dollars. And it might just make sense. If you get a no fee and you can drop a half a point and save $300-400 a month, a no brainer. So, or down to 15-year. By the way, they do 25-year, which is the same rate as 30, so no sense in doing that. 20 year, you get a little better rate. 15 year, you get an even better rate. And it'll come back soon, but the 10 year is an even better rate than the 15. It's not right now. We're still in a weird curve. I'm just going to call it weird. So, that are totally inverted. Anyway, it's just fun with mortgages.
Yes. I think this has been another episode of We Fixed Real Estate.